this week's episode of Trade the Chain. Today, we got our regulars here. We have CJ and Monty, our analysts. We have co-host Ryan Gorman as well. And I'm coming out from London, and I'm at Eric Ben, CEO of Changelly's house, his crypto castle in Notting Hill. So you may hear some weird sounds coming from inside or outside the apartment. And I apologize for that in advance. Today, we're coming on the heels of a really volatile week in the markets, and a lot to talk about. First thing I want to do for sure is go to CJ and Monty, hit some TA up on the Bitcoin chart. So, guys, if you could kind of explain how this wild week went. I mean, we had a great price action to the upside. And then all of a sudden, between a correlation with traditional markets, we just fell out. I mean, explain to everybody what's going on here.
Yeah, so let me get to the charts to give you guys a better perspective of what's going on. Yeah, so let's go to Bitcoin first off. So the one thing that's at this current point that I'm actually, like, I wouldn't get into a short at this particular point because we've already hit this 128 period moving average. That's very strong support historically in bull markets for Bitcoin. And if I go back to some historical data throughout 2017, throughout the 2016 and 2017 run-up, you'll see here that we pulled back to either the 50 period moving average, which is the gray line, or the 128 period moving average, which is the green line. And we found, sorry, it's taking a minute for this chart to load. Anyways, you can see how we formed very strong support all throughout the rally. And I can see a lot of traders or buy pressure potentially stepping in as we bounce off this level once again. That being said, if I was in a short, which I'm not, Monty had a very nice short this week though. And, I would think about taking some profit at this particular point. But the main catalyst of this drop in my mind is without a doubt coming from the equity market and traditional markets. And while this drop was pretty drastic, like Apple, for instance, is down about 20% from its all-time highs in just a couple days. But looking at the S&P from a more longer-term time frame, we are now making new highs, all-time highs, in fact. And when you do that and you get up to these levels of 3,500 in the S&P, there's just not a lot of bids up here. No one wants to step in and buy this strength because we're already so high up on this parabolic run. So what that affects is that when people take profit, and I don't really see this as a crash, I just see this as bulls taking profit, there's just no real buy pressure to step in. And that's why we waterfall so quickly. And so if we actually look at the correlation between the S&P and Bitcoin, we can see here that these two drops were pretty much, happened simultaneously. And although we were kind of optimistic that Bitcoin was becoming less and less correlated with the S&P, it doesn't seem to be able to have its own independent strength to break out of that correlation at our current time.
Can you tell us more about, why when there are drops, Bitcoin tends to drop in lockstep almost with the S&P when it goes down so drastically?
Yeah, and not just with the S&P, but there are also a couple really strong things that affect Bitcoin. Like through research and just what we've seen over the years is when Bitcoin gets in these long periods or mild periods of very low volatility and price action, it tends to decrease as it kind of rolls out of that consolidation phase. There were strong signals in the S&P that were pretty much telling you to take profit. If we look back here and look at all of these nines throughout sequential, this was not a perfect 9, this was a green 8, but it still told you that we were getting to a sell-off. And we go up here, we reach another green 8, which is really giving you a serious warning signal when we are, running towards the end of this parabolic run. So very close correlation that we're seeing right there. But it's nice to see that we're bouncing off, at least in Bitcoin, we're bouncing off these moving averages, as well as in Ethereum as well. So I'm not going to take up any more time. I will now pass the torch on to Monty.
Yeah, sure. If you could actually just pull back up that daily chart of Bitcoin, I just want to, you touched on a lot of good stuff there, but I just want to quickly talk about kind of the pattern that I saw emerging. So on the daily chart of Bitcoin here, like CJ said, I actually decided to go short about 3 days ago. And obviously there's a lot of other factors at play that is driving price action. But for me, this looked like a really strong head and shoulders formation. And I'm not necessarily the strongest believer in pattern trading, but I do believe in technical analysis. And if you just look at the sort of pattern that's emerging here, we had this this strong green 9 candle that carried us all the way up to the prices that we were kind of holding steady at for a while. And then where CJ has the cursor now, we can see the sort of head of this shape. And once this next red 1 happened, this kind of start of the shoulder here, is when I kind of thought that when it's correlated with the stock market, I thought this could be a significant drop in price and kind of the completion of this head and shoulders pattern. So I decided to go short right here. And yeah, it ended up working out as it kind of paralleled our movement up. The movement down was almost exactly the same. The volume looks the same and the length of the candle looks the same. So yeah, this was a pretty good head and shoulders formation for me. What's going to be hard from now on out is kind of interpreting where this is going. I mean, we saw it bounce all the way below 10K, and 10K for me, I thought was going to hold very strong support, but it kind of broke right through that. I think now that it's back above the moving average and back above 10K, I think that may be the new bottom, but I actually have seen a lot of talk on Twitter that it could retest all the way down to 9,200, back where we kind of had this lackluster price action before the bull run. So we had our fun period up above 11K and all the way testing 12K, but it's starting to look like along with the stock market tanking and this formation emerging, that we may kind of level off somewhere between 9,000 and 10,000 and steady there for a while, but we're just gonna have to wait and see.
Yeah, if I could just interject one last thing here, talking to your head and shoulders pattern, and for those studying TA, volume is very important when you're looking at a head and shoulders pattern. This is a very characteristic head and shoulders pattern with the most volume occurring on the left shoulder, medium volume occurring at the head, and then much more severe volume occurring on the drop.
Can you talk a little bit more about the impact DeFi is having on Bitcoin and also on Ethereum?
Yeah, I mean, going to Ryan's point, you know, if is DeFi having an impact on the Ethereum charts, you know, and the price, because a lot of people disappointed on the mental resistance of 400, and so we're kind of bobbing back and forth on it.
Yeah, it's been particularly interesting, I think, especially because we've seen kind of all these high yield and extremely high risk DeFi platforms emerge. And like we were talking about before, a lot of them have been creatively named after food. But I think yield farming is like the new kind of big thing. People are looking for ways to quickly make money. And I think we saw Ethereum, it reached a 2020 high. I pushed like 485 or something like that. And I think a lot of that has to do with all these projects popping up that are promising these extremely high risk but high yielding prospects. And as a result, we saw that massive spike. But now as those projects are starting to lose their hype, I think the reversion was imminent. And yeah, we're starting to see kind of a return to normalcy here.
I know Ryan's dying to say, yeah, looks like some people left some sushi on the table, but Ryan, what were you going to say?
Yeah, also, there was a lot of reporting earlier this week about around BitThumb being raided by the authorities in South Korea due to what they saw was a fraudulent initial exchange offering, their proprietary token, and then of course a somewhat dubious buyout offer from Singapore. Do you think that that also had a role in this drawdown, or was it mostly related to the equities markets and traders trying to cover shorts in traditional assets?
Yeah, so I don't think it helped at all. I think it definitely could have been a catalyst to scare the Asian market in South Korea just a bit.
Mm-hmm.
But I think it's more to do with the US equity market, because when we look at exactly when these things crashed, Bitcoin crashed kind of when the S&P started trading down in the post-market. So I don't think, like, you know, this news event didn't help, but I don't think it was the primary catalyst. I think it was just due to massive profit taking and, you know, massive companies like Apple and a lot of the major players in the S&P.
Gotcha.
All right. Well, yeah, and you know that was one of the news topics we wanted to hit on, but it was hard not to. It was hard to leave it for the end because it really had to do with the markets. There was a lot of hype and a lot of ideas flowing around that was part of the cause. But you know, as CJ pointed out, it was. I think it was more correlation to traditional markets than anything. So we're going to move on to our hot or not list. And this week's a little special because we don't have a not list. The markets were in such disruption that it would actually, you know, there's no point in singling out any particular ticker that took a dive because so many of them did. But, you know, for the hot list, the first one we want to start out with is Tron. Now, TRX has a little movement going on, and although I'm not a big fan of Tron, you know, there is some what's beginning to look like some opportunity. But CJ, if you could hit the charts, let us know what you're seeing there. You're on mute.
Viewer?
My bad. So yeah, Tron, you know, good if you had it from a macro perspective on the weekly. This is a pretty nice run up that could have got you in based on sequential. But if we look at this, we really topped and are starting to get towards the end of the trend in both the daily sequential as well as the weekly sequential. We have a massive shooting star candle, which is traditionally pretty bearish. It means, you know, the momentum of the trend is now trending down. So that's not what you want to see from a bullish perspective on the weekly. It's pretty much a giant warning signal from sequential. So I would just wait this one out. But do you guys, I'm interested to hear your guys' thoughts.
Yeah, I think one thing that's really interesting with Tron is, I mean, it's true with a lot of cryptos, but the price doesn't necessarily go up because of the technicals, but just because of other news that the developers are putting out there. And I don't know if you've heard anything about Tron's Sun Genesis mining, but essentially they tweeted a few days ago that they're going to be allowing Genesis mining of Sun, which is a new token, and it's essentially it relies on the principles of community self-governance and encryption. So essentially by using your Tron tokens, you can participate in the mining of this Sun, the Genesis mining of this Sun token. So I think that has a lot to do with what was driving Tron's price upward in the past week. But as the kind of hype around this dies down, I mean, the Tron community in the past has kind of faced criticism over their lack of autonomy and over the amount of control that Justin Sun has over the network. So I think that this Sun token is an attempt to address that. And it seems like the Tron community is kind of really buying into it because we did see a nice run up in price in this last week.
And do you hold concerns about Justin's closeness with control of TRX? Do you think that is something that, you know, people should be skeptical of?
Yeah. Personally, I'm not a fan of when a developer has that sort of relationship with the token. I mean, obviously the whole ethos of crypto was kind of, the precedent was set by Satoshi, where you separate your identity from your project in order to just give your project legitimacy and not kind of, I mean, Justin Sun he's faced a lot of things that have changed the price of his coin. And that as a holder of the coin, that's not something you want to see. You don't want a personality to be dictating the price. You want it to be based on the merit of the coin itself. So yeah, I've never been a fan of how closely tied Justin Sun is to the project, and also how vocal he is on Twitter about it. But I mean, that doesn't necessarily mean that there isn't money to be made here. And it doesn't even mean that the coin itself doesn't have merit. But yeah, I'm not particularly a fan of that dynamic.
Well, you must love Richard Hart then.
Oh yeah, it reminds me a lot. That's when we were talking about Sushi before. It reminded me a lot of Richard Hart and Hexcoin, because I heard that with Sushi, there's a wall with $27 million worth of funds in there that only the developers have access to, and it's not like a governance thing. So it reminded me a lot of the Richard Hart imminent exit scam and Hexcoin.
It's funny because you haven't heard a lot from him lately, and which is good. So haven't learned a lot from him or Craig Wright. Moving on to our next one, hot ticker of the week's Celo. I mean, this just had a phenomenal price action this past week. You can see from the charts here that, substantial gains. I mean, what can we attribute this to, guys? What's this looking at?
For me, I think this is pretty simple. I've seen a lot of people talking about it on Twitter, and you've probably heard of the Coinbase effect, where when a coin is listed on Coinbase, you immediately see a spike in trading volume and often price. And I think that's kind of exactly what happened here. Coinbase, the largest exchange in the United States, announced that they'd be allowing for the trading of Celo, and literally the next day, price surged to upwards of $4, I believe. So, yeah, just the ability for more people to trade it, and also Coinbase kind of promoting it as a new and novel token, I think really did good things for this coin. But I don't think it's a sustainable growth. I think it will return once the hype kind of dies down.
CJ, I'm mute.
Yeah, sorry.
No worries.
Yeah, Monty, one point that I thought you made that was good when we were talking about Tron is that these projects aren't necessarily trading on technical fundamentals. They're more trading on news. And as a trader, it's pretty difficult, at least in my trading strategies, to trade strictly based on news. Like we have to.
It's like event driven, these things. I mean, they just have no rationale mindset.
Yeah, exactly. I mean, we were looking at, what was it, UMA last week, and everything was overbought. All even Sequential was telling you to at least take profits. Nevertheless, it went up another like 100 or 150%.
Yeah, I mean,
doing the same thing.
And you had, I mean, listen, you had a compelling case for UMA. And I just couldn't believe when I saw the price just rise, double over again, especially when it really was looking like such an insider pump.
Yeah, Coinbase actually did announce that UMA will be available for trading on Coinbase Pro starting September 8th. So that could have something to do with the spike in price, but yeah, who knows?
All right, very cool. Any other notables anybody wants to mention this week? Like I said, the volatility is kind of clouded a lot of the judgment and stuff. But anybody want to talk about any outliers?
Well, did you want to discuss Sushi real briefly, Alex? Or
I do. Listen, there's a lot of retail market following Sushi, looking at especially the price action over the first 5 to 7 days that it did. It's now retracted about 50% off of its high about. The thing is that, yeah, we could talk about sushi, but, you know, from a rational fundamental standpoint, it's still not making proper sense just yet. But yeah, let's go into it.
Hard to go off of when we only have 5 days of price data, so I might as well just bring it up on CoinMarketCap. Ryan was talking before the show, kind of really laying out the risk of interacting with these yield farming tokens. And while they can be very profitable, due to Ethereum fees and just a lack of liquidity in a lot of Uniswap's tokens, these things can fall extremely fast and they are risky. So I would just advise, I hope you know what you're doing when you get into Sushi Swap. But I mean, personally, I don't own any, and it is another one of those irrational things that it's tough to bet on.
Yeah, I mean, people really just have to, you know, the average person really just has to be careful with it. And I mean, not even average, you know, we're in this space, is what we do for a living. You know, so you have to have a little bit of guts to kind of jump into this. It's, you know, the returns are compelling off of the farming and stuff like that, but you got to recognize, you know, you're looking at 16% loss down for the day, about 40%, 50% loss for the week. You just have to understand that you could lose it all. I do own some DeFi. I don't own Sushi, but I will say that my DeFi portfolio has retracted pretty good over the last 5 days.
And happy to be adventurous with some of the tokens. You only live once, let's have some fun. But like a little out there even for me, you know. I don't see the point unless you're a professional trader or have access to instantly liquidate these this type of token.
100%.
Yeah.
And sometimes there's wallet connections that aren't syncing up, and you know that could cause some time decay and trying to arbit. I mean, if they say 1% allocation of your portfolio into crypto, I say 0.01% of that 1% of crypto into DeFi. Just know what you're gonna get. Monty, I cut you off. What were you gonna say, bud?
No, just one last thing. I actually touched on it a little bit earlier, but yeah, there's a lot of talk on Twitter. A Twitter user actually found out that the deployer wallet, and he went ahead and listed the address, has around 27 million US dollars worth of Sushi that's just ready to be dumped. So essentially, not only do you need to rely on like the trustworthiness of the developers. They're holding the entire fate of this token in their hand. And I mean, initially people thought that this money would be handled by some sort of governance or something like that. But as it stands, there is absolutely no governance over this wallet. It's completely controlled by the developers. And yeah, that's a massive red flag for a crypto that's still in its infancy like this.
That seems a bit centralized for something calling it DeFi, right?
No doubt.
It's ridiculous. No thanks.
We'll see Sushi. All right. Well, folks, thanks for joining us. I mean, we got Monty and CJ out of Chicago, Ryan out of the Big Apple. I'm in London at the Crypto Castle of Eric Benz. You know, this just watch out what you're doing, everybody. You know, whether it's let the smart people handle Sushi. I don't think the three of us are dipping our toes in it anytime soon. I think they just had a derivative come off of the kimchi. We'll see what menu item is next week, but you know, it's all good. Anyway, we'll see you guys next Friday. Thanks for joining us.